Thank you for joining us on Capital Academy. Capital Academy is where we advance conversations with entrepreneurs while engaging with investors and industry professionals that support them. On Capital Academy, we're all about the early stage and startup company ecosystem, helping to bridge the gaps between know-how, best practices, and possibilities. On today's segment of Capital Academy, I'd like to welcome Hilton Augustine, who is going to help us in talking through some of the processes that entrepreneurs deal with as it relates to, again, some best practices that are necessary to do what it is that they do. So Hilton, thank you so much for joining me today.
Absolutely, my pleasure.
And I'd love if you'd first start by just letting our listeners understand who you are, what you do, what your background is in this space.
Okay, so typically I call myself a shark,
Okay.
and as everybody understands about the Shark Tank program, so that's where I model myself from, but the industry calls it angel investing. So we are angels,
Okay.
and a typical angel would be an entrepreneur who's had an exit from some other business and has some capital and would like a better return than putting it in a bank at less than 1% or risking it in the stock market, so you go for a little higher risk but a higher return.
Right.
And so that's what angels do in general.
Okay.
I was fortunate to have a successful business over the years. I sold part of it about 6 years ago and set aside some of that funding to do this.
Okay.
So for the last 6 years or so, I've been investing full-time in
Okay.
startup companies, looking for those companies that I believe are going to get a huge return for investors.
Right.
But again, that's the balance of the risk, and of course some don't make
Okay.
it. But that's pretty much what I do.
Do you work as an independent, as a singular angel, or are you working with a group of angels, or how does that work?
Okay, most angels are individuals, and some form LLCs and partnerships to combine their resources. But in general, most are part of some kind of group. And it can be formal groups that meet regularly, or they can be online exchanges.
Right.
Some examples are the Digman Center, which I'm part of. So we have about 40 or 50 angels, and we meet once a month, and we actually have pitches done to us. And we look at the pitches and decide what companies we want to invest in at that point. So
Gotcha.
that's a formal version. An online version might include things like Angel List.
Right.
So you got an exchange online where investors know we're looking for entrepreneurs and entrepreneurs on. Everyone has a profile very much like LinkedIn.
Right.
But it's there solely for the purpose of connecting those investors with the entrepreneurs.
Got you. Before we get started with this segment, because that's very interesting to me, when you are assessing companies that you see on the angel list and, you know, a few of the others, Gus.com, Crunchbase, things of that nature, how do you work through that process of looking, assessing, and possibly connecting with companies? What jumps out for you to make you want to connect to the companies there?
Right. Great question. So first of all, as an investor, you have to look at thousands of pitches. There are companies starting every day, and again, you see it with things like Shark Tank. So I use that as a reference a lot because people see it. So I have to literally look at thousands of companies. And what I like to do is look at the first summary paragraph to see what they identified as the problem they're going to solve, and quickly say how we're going to solve this.
Gotcha.
And so since I'm looking for disruptors, I'm looking for big problems. Now, there are other characteristics that might say, this is something totally new. Because if you presented Uber to me when it first started out, I would have said, that's not a problem. We have taxis. You can call your friend and bring you somewhere. So it didn't exist as a problem, but they said, we have something that's going to create a new industry. So I have to look at that as well. So you should be able to tell me that in that first paragraph as well. So if I get past that, then I'll start reading more details in that executive summary. But that's a quick scan. That's if I see it online. Same thing happens when we see it in person. So if we're watching a pitch, that first part of the pitch, if you want to keep me engaged, you got to tell me I got a big enough problem and I'm going to solve it.
Gotcha. And so a lot of theory is, and I know different people look for different things. Of course, the other side is people want to know, who are you in the beginning? Is that some part of what makes a difference for you, or is it truly, what's the problem, how are you solving it?
Well, it becomes part of it. So we have a long list of due diligence items, including the team and their expertise, the board of advisors and things like that. So all of it comes into play. but none of it matters if you don't have a big enough
Gotcha.
problem to solve.
Gotcha.
So
We'll
we
take
start there,
Okay.
and then we look at the components. Then let's see how they validate that problem. You could tell me right now there's a $2 trillion problem out there,
Right.
but how do you back that up?
Right.
And then how do you back up that solution? So now we're start talking about the team, the technology, all the resources that we come to bear that convinces me this is well worth my risk.
Okay. Okay, so we've already started because
Okay.
I wanted us to talk about really that investor mindset.
Right.
You know, because you have so many entrepreneurs who are trying to raise capital. And, you know, you can read about, you can go through various pitches, you do all the pieces, but I think oftentimes for them to truly understand from an investor directly, what are the things you look about? What are what are these things that you're learning in a book,
Right.
or from reading posts? What is it that an investor really wants to see, feel, and hear?
Okay.
So I have a couple of questions. Who knows
Absolutely.
how many we'll get to, but. Some best practices for an entrepreneur to reach out to investors, and you can respond in any respect. Like
Okay.
just now, we talked about some of the online platforms, but whether it's LinkedIn, whether it's them doing research on you and sending direct emails, what is from your standpoint, some best practices for entrepreneurs to consider as they're trying to get the attention
Right.
for you?
I personally like the formal channels. So whether it's Gust or Angel List or the Digman Center or any of the investor groups, because each one of them has some sort of pre-screening or at least some level of due diligence they have to go through first. Even if it's creating a profile online, it makes the entrepreneur go through a thought process. I have to fill in the blanks. I have to put in a business plan or whatever they do. More of the formal investment groups have a screening process where maybe some smaller group of members interview first, and then they present you to the whole body. So I prefer that method because we get more qualified candidates in front of me. I do get solicitations through LinkedIn and every other social media vehicle as well. So those, I will take a quick look and again, look at that summary. And if it catches my attention, I'll go further. But those are less likely because, like I said, they've not gone through any screening and it's usually going to be a waste of my time. So that's why I join the formal groups and the networks so that we can all benefit from screening and the process, as well as other entrepreneurs, other investors who have seen other companies or presented at other investment groups and things like that. They'll bring in companies as well. So now I have a pool of companies that at least, you've seen it on Shark Tank sometimes when people come in and they can't answer the basic questions, you know, and I was like, haven't you seen the show before?
That's exactly right.
So, and companies like yours, that's what you're helping entrepreneurs do, to go through the learning and the process, go through the stumbling that they have to do first, which everybody goes through, so that when you present to me, you're already telling me what I want to know.
Gotcha. Does that mean that startup, coming out of concept or in concept, does that mean that a startup or early stage, a startup company, a concept company is going to have more, less, or doesn't make a difference of a challenge to get interest?
See, now we're getting to the point where we're talking about the differences between investors.
Okay.
And investors are as different as we are as people because that's who they are. So everyone has their own level of risk they're willing to take, the industries they feel comfortable investing in, how they feel personally about the management team. So we have our own biases and things like that as well. So at that point, I think it's important for the entrepreneur to do a little research on the investors. It's hard when it's a whole group, obviously. But that's also your best shot, right? Because I'm looking at 50 people, chances are, you know, somebody's going to like what I'm doing, and hopefully a group of them. But outside of that, for the entrepreneur to understand what kind of disruptors am I looking for? And you mentioned how early a stage from concept and things like that. I've invested from no product and only a concept through actual running revenues and dominated a market and only looking to expand in other markets. And again, I was confident in doing that because of my background in technology. I saw a concept that I said, the risk for me is getting that to a commercial stage, not getting the concept to work. So it took it from a beta, no real product, no revenue, But if this thing takes off, it's going to be huge, you know, so that's the kind of risk I took on that. But if you brought me something that I said, it's close, it's got competitors, it's a evolutionary kind of thing, but not revolutionary. And so there's some risk in a competitor doing it or a better finance startup who's in your exact same shoes. I may look at the risk a little differently and say either invest less money or do more due diligence, or you have to convince me more that this is going to be better than the next person or the people I don't even know who are sitting in a garage somewhere doing the same thing and they just haven't made themselves public yet.
Right. This is outside of what I wanted to talk about, but as you were saying that, this is a question I get from entrepreneurs all the time, so I'm throwing this in here. Credit. How much does an entrepreneur's credit mean to you as an investor?
Okay, so again, individually, everybody's a little different. I look at it as one of the things that just tells me how you operate. So credit is a commitment. It's a commitment to doing something that you committed to and delivering on that. So that, along with everything else you've done and said, like to your previous investors, if there are rounds of investors, whether it's friends and family or other seed investors, you made a commitment with that money. Did you deliver? And that's how we get to the next round. So if I got to the point where I'm really looking at making an investment and I'm saying I'm doing my due diligence, credit, your credit history, things like that become important because it tells me what kind of person I expect financially. And it's just like the banks and everybody else. We're going to give you money and expect you to do something responsible with it that we agree to. And if you got a history of doing that, that helps.
So if the idea is good, you might move forward. If it's not, that could be another reason that sort of makes you
it weighs in the equation. It's not a you know, if your credit's bad, it's a no-go. It's just another reason.
Would you look for them to put some kind of financial management in place in order to compensate for what it is?
Absolutely. Yeah, and some companies need very little attention. So you invest the money in them and they have a good management team. You get a weekly or monthly report from them, so you see things going along. Some are at different stages, and sometimes the entrepreneur does not have financial management training. They've never done this before. So they take a little bit more of my time and other investors' time to say, let's come in every week, let's look at things, let's look at how we're doing the accounting, bring in some additional help if we need. So yeah, if everything else is good and you only got one problem, we want to fix that because it's still worth it for an investor to look at that. That's just another part of the game.
So that's it for you guys relative to entrepreneurs' credit, which I call it. So going back to the investor mindset, how important is it for, and you kind of touched on this a little bit already, how important is it for your expectation for the entrepreneurs to have done some research on you before they reach out?
So it's always a difficult situation for them because as an entrepreneur, you have to go out all the time marketing. So there's a lot of people you have to. So at some extent, yeah, I expect that you at least looked at the group I'm involved in to see what kinds of investments they make, or look at the individual and ask them. You know, I'm online. Every investor has a profile on Gust or any one of those, so they should at least be able to say, "Oh, I see you invest in these areas." I list all the investments I've made, so you can look at that and say, "I see you've invested in this industry. This is where I am." So if you come to me with, you know, I'm a fisherman off the shore of, you know, somewhere, and I don't know anything about fishing, it's just hard for me to invest in the fishing business.
I mean, I have that conversation with them oftentimes also. In anything, know your customer, right? So even if you're looking for an investor, know who invests in what you do before you start spinning your wheels.
Because you're wasting both parties' time.
Well, you might only be wasting your time, right? Because the investor may never look. Like, I don't do that, but can you talk about time? The time from I'm an entrepreneur, I send you my package, so from you initially taking a look to a potential, if it's going to be positive, to a potential close. What is the time horizon that an entrepreneur might expect to sort of go through the full process again of there's some level of interest. Now I'm starting to provide you with all the documentation through due diligence and close. What kind of time horizon could they be looking at?
For me, it could be anywhere from a month to 2 months.
Okay.
And that depends on how much other due diligence I'm involved in at the time. But if nothing else were going on, and this was the only company we're focused on, it could be about a month.
Gotcha.
So
That's short. That's a very short
and this is where
time.
angels
Great.
come, as an individual, I can operate that way.
Right.
As opposed to the next level of funding, which comes
Right.
from venture capital or any institutional kind of money.
Right.
They have processes and committees and reviews and stuff like that. So I may run it across another one of my investor friends. What do you think about this? Have you heard about this? Those kinds of things. And the rest of the due diligence I can do, that is checking into their backgrounds, the corporate history, financial stuff, are they registered with the state, all the dot the I's, cross the T's kinds of things. I, along with my lawyer, can look at those kinds of things and get it done fairly quickly.
Lawyer? Okay, you just threw something in there. Point well taken.
So again, as an investor,
Yeah.
I'm risking my own capital. And some people, they get started and they don't dot the I's across the T's. They may not even be a corporation yet, believe it or not. Or be registered to do business in the states they're doing business in, or trademarks and all those kinds of things. So
I see a lot of that too, yeah.
exactly. And again, no fault of their own, because somebody has to tell them.
Yeah. Yeah.
And if they get to me before they have that experience or the training,
Right.
then I have to at least identify it and say, until you get this straight,
Right.
I can't even do business with you, because I'm at risk
Right.
when somebody says, we're going to pull a plug on your business. So those are the kinds of things where, again, as I'm doing due diligence,
Right.
if I find these kinds of things, we have to remedy these first, good idea or not.
Right, right.
And one example being a company that didn't have the IP. So they said, we have this technology, but they were getting it from another company, but it had not transferred yet. So a resolution was to put the investment in escrow and wait till that IP came into the company, then you can use that investment. But
Gotcha.
my money was protected
Right.
until you were the company you claim to be.
Gotcha. All right, so timing, because on that story, what's interesting is, because of what I do, when people hear helping them to raise capital, the immediate thing is, well, I need this in, 10 minutes.
Right.
I'm like, no, it takes longer than that. But okay, so that's time frame. What happens when an investor goes dark?
Yeah. So the two periods of darkness, as I put it, so as I start doing my due diligence, you may not hear from me unless I got a question,
Okay.
which is a positive thing for you, by the way. So
Great.
if I'm still
Okay.
asking questions, I'm
Right.
still engaged, I'm still
Gotcha.
involved, I'm still looking to get an answer.
Okay.
And by the way, because we have so many, we're always trying to, this is not going to work. I want to get that out of the way.
Okay.
So if I haven't done that yet, we're still in the game.
Okay.
Now, so that might be a dark period. You might worry and say, check, but it's not a concern at that time.
Okay.
I'm doing my work.
Okay.
If we're engaged along the way and we get to a point where we kind of got a deal and we know what we're going to do, and I go dark at this point, I would be concerned.
Okay.
And it could be something else caught my interest, something else got busy with, I reallocated the resources somewhere else. But the entrepreneur, whenever you have communications, and this is typical in any industry and any business, your communication should be, when is our next communication?
Right. Right.
What's the next steps? When is the next time you want to hear from me? Those kinds of things, so that they actually have something that they can check on.
Right.
And then if that milestone is missed and you get no response, it's probably not going to happen. The deal's probably gone.
So when there's no response, you can, there's no interest. It's
Right.
not like when you're trying to sell your widget that you keep calling for 12
Right.
times.
And they'll eventually,
you
you'll
get
break
a
them
sale.
down.
Exactly.
Right.
Like with
Yeah.
investments, you get it once there's no longer communication.
Now this is like the goose that laid the golden egg. If you convince me that there's a goose and it's laying golden eggs,
Right.
I'm going to be engaged and want to close. I want a
Gotcha.
piece of that goose
Right.
that's laying the golden egg.
Right.
If I'm walking away from it,
Okay.
so
Right. Is there anything that you can convey to entrepreneurs looking to raise capital, early stage startup companies, the mindset of the investors that they are trying to reach? Is there any comments that you can make to them as we're coming to a close of this segment?
I think the most important thing for entrepreneurs to understand is that this is a person. So you got all the things that go along with human person you're addressing. So make sure you're aware of that. And it's not a company or an institution. That person has risk assessments that they want to put in this, and we want to make money. You know, it's the bottom line. Here's my Mr. Wonderful coming out. Right. I want to make money. So yes. No matter what you say in your pitch, the whole thing better wrap around how do I turn my investment in you into 10, 20, 100 times that investment. Gotcha. Because most of the companies I invest in are not going to make it. Gotcha. Because of the level of risk and the early stage that they're in. So the ones or two that's going to make it, that you're convincing me you are, wrap it up and show me how I'm going to make that money. Gotcha. So that's the important thing to remember. I'm an investor first, and I want to make sure I make money, so focus on that.
Gotcha. I think that's very important what you just said right there, that they, at the end of the day, they do have to understand how they have to convey to you that they'll help your money make money.
Exactly.
Great. Hilton, thank you so much.
It's been a pleasure. I appreciate being here. Mm-hmm.
Absolutely. And that's a conversation relative to an investor mindset. So if you are out there, if you're looking to raise capital, I hope that this information just helps you to understand some of the thought processes that's on the other side of your business plan. As you're walking through putting your information together, think about the audience that you're sending that information to if you want a successful raise. Thank you so much for joining us today on this segment of Capital Academy. If you liked what you heard, please share it with your friends, families, others who are also looking to raise capital. And you can always check us out at ibossinktv.net. Look to see you next time.
If you have a pressing question, log on to ibossinc.net and click Send Voicemail. We'll look forward to hearing from you.